So what caused yesterday's sell-off? Well, pick your poison. An overvalued market in desperate need of a correction, a rate hike from the Bank of Japan, weak job data, delays at the Fed, slowing economic growth. In reality, it's actually a combination of all these things, with a hint of fear that Kamala Harris could beat Trump in the next election. While neither candidate will be particularly positive for the long-term health and sustainability of the U.S. economy, indeed, a Trump win would likely trigger a bullish sentiment on Wall Street. But even with the bulls running wild in the financial markets, overall, the health of the U.S. economy is still very much in peril, particularly when you consider three specific economic pressures that are unlikely to be properly addressed in the near term. Let's start with perhaps the biggest elephant in the room, the $35 trillion tornado. You see, long-term economic growth will be hindered by unsustainable debt loads for the foreseeable future. With the national debt officially exceeding $35 trillion, we are now paying $2 billion per day just on interest payments on the debt. Our debt-to-GDP ratio exceeded 130% during COVID, and while it has come down a bit since then, today it still registers at around 122%. To clarify, a healthy debt-to-GDP ratio for a country the size of the United States should be no higher than 70%. And while it is possible to decrease our debt-to-GDP ratio, neither of the major candidates for president have offered a tangible solution for cutting spending while increasing revenue. And neither will, because doing so in an honest and forthright way would be antithetical to winning an election. Most voters can't handle the truth and are more than happy to be lied to as opposed to hearing some very uncomfortable truths. Indeed, the only candidate that has proposed any viable solution to this is Libertarian candidate Chase Oliver, who can't even get an invite to a proper debate or access the same amount of media coverage that the two-party duopoly has right now. And that's intentional. It's not about getting our fiscal house in order, it's about creating the illusion that we are attempting to get our fiscal house in order. And they've been doing this for decades. Kicking the can down the road is great for politics, but detrimental to your ability to create and protect your wealth. And that, my friend, is cause for alarm. Now consider the issue of tariffs, hidden taxes wrapped in the lie of American job creation. I call it tariffs and treachery. Tariffs imposed by both the Biden and Trump administrations will likely continue to make things more expensive for the average consumer. If Kamala Harris wins the next election, I see no evidence to suggest that she will reverse any of these tariffs that, in reality, amount to just another tax increase on Americans. The good folks over the Tax Foundation did an excellent job clarifying the economic damage that has been imposed by these tariffs. Let's take a look. The Trump administration imposed nearly $80 billion worth of new taxes on Americans by levying tariffs on thousands of products valued at approximately $380 billion in 2018 and 2019, amounting to one of the largest tax increases in decades. The Biden administration kept most of the Trump administration tariffs in place, and in May 2024 announced tariff hikes on an additional $18 billion of Chinese goods, including semiconductors and electric vehicles, for an additional tax increase of $3.6 billion. It is estimated that the Trump-Biden tariffs will reduce long-run GDP by 0.2%, the capital stock by 0.1%, and employment by 142,000 full-time equivalent jobs. Altogether, the trade war policies currently in place add up to $79 billion in tariffs based on trade levels at the time of tariff implementation and excluding behavioral and dynamic effects. Before accounting for behavioral effects, the $79 billion in higher tariffs amount to an average annual tax increase on U.S. households of $625. Based on actual revenue collections data, trade war tariffs have directly increased tax collections by $200 to $300 annually per U.S. household on average. Both estimates understate the cost to U.S. households because they do not factor in the lost output, lower incomes, and loss in consumer choice the tariffs have caused. Now, candidate Trump has proposed significant tariff hikes as part of his presidential campaign. If imposed, it is estimated that these tariff increases would hike taxes by another $524 billion annually and shrink GDP by at least 0.8% and employment by 684,000 full-time equivalent jobs. These estimates do not capture the effects of retaliation, nor the additional harms that would stem from starting a global trade war. Now, the next thing I want to talk about is something a lot of people don't really want to talk about, but it's important that we address it, and that's social unrest, which does breed economic instability. If unsustainable debt and excessive taxation on American citizens isn't enough, now add some fuel to the fire with social unrest. Now, I'm not typically an alarmist, but I believe that it would be foolish to ignore the potential of coming social unrest as a result of this next election. Now, make no mistake, if Kamala wins, there will be a lot of Trump supporters who will absolutely not accept the decision, and violence is not only possible, but probable. If Trump wins, there will absolutely be some far-left agitators seeking vengeance on not only Trump, but Trump supporters who like to advertise their loyalty with red hats and Let's Go Brandon bumper stickers. As absurdly stupid as partisan pissing matches are, when they turn into violence, it goes from stupid to dangerous. Not just directly, but indirectly, in terms of loss of basic freedoms, such as the absence of government surveillance on U.S. citizens and threats to the First and Second Amendment. Then there are the economic implications, which include but are not limited to the devaluation of property values, property damage, decrease in tourism revenue. In 2023, revenue from tourism in the U.S. topped out at $204.45 billion. And then there's just overall declines in economic activity in affected areas. Now understand, I'm not saying this is absolute, but to ignore the potential of political violence following the next election would be foolish. In other words, hope for the best, but expect the worst. And my point is simple. While I don't believe the U.S. is doomed to some kind of apocalyptic nightmare, if we don't seek to immediately stabilize and reduce our debt, eschew miscalculated protectionist policies, and tone down the violent political rhetoric that is being amplified by opportunistic media whores and social media antagonizers who seem to get off on provoking hostility and divisiveness, we're going to be in a world of hurt. That being said, I am cautiously optimistic that cooler heads will ultimately prevail, and we will see legitimate efforts to stabilize and reduce our debt, as well as protect our democracy and our very fortunate way of life. But the road to economic, political, and social stability will be a rocky one that will require a very calculated approach to our investment strategy. In the coming days, we will share with you how we plan to not only survive increased economic pressure in the coming years, but actually profit from them. In the meantime, don't panic and definitely do not sell your positions out of fear. If history has taught us anything, it's that there's nothing more damaging to your wealth building strategy than panic selling.